Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 16th, 2017. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, what we can assess here is that the dollar is very mixed on the most recent data that's come out, the CPI data. Now, again, in my respectful opinion, the data was quite good, 2.2% CPI year over year. That's actually a stronger number here, and that's above the Fed's target rate. So I believe that essentially that is going to lead to a rate hike in December. Now, I could be wrong with that, but at this time, I don't think so. So when we look at this, we've got a pretty steep decline off this trend line, but we're getting all tangled up around this VantagePoint 18-day predicted moving average at 92.90. Now, this area is a critical level. We've just managed to close above it at 92.93. So we want to watch this level very closely. The neural index is pointing higher. We're still firmly above the zero line on the predicted MACD, but a point of interest here to me is the fact that we don't have any downward momentum. Our predicted RSI is still below 50, but it is not breaking below 40. A break below 40 would trigger a much bigger move to the downside, but with a very light economic data next week, economic calendar, excuse me, I don't think that that's going to happen. Now, when we look at a break of the predicted RSI, guys, this is what we're looking for here. We're looking for a move like this where we've got momentum, or if we're going back and forth here or something along that line to trigger a bigger move. So right now that doesn't appear to be it. So the dollar may not do great next week, but I don't think it's going to do horribly either. So that brings us directly to Euro US, basically a 99.9% correlation to the dollar index. One goes up, one goes down. That's how this works in Forex trading. So with our critical level, 118.03, we managed to just close above that at 118.18, but our neural index is down. Our predicted short, medium, and long-term differences, our medium and long-term differences are mildly bullish here, but we're below the zero line on the predicted MACD. And once again, to point out the benefit of using the predicted RSI, as I've suggested, we are not building any kind of momentum to the upside. So in order for us to be strong buyers of this or sellers, we want to break below 40 or we want to break above 60. That is currently not happening. So we're likely just going to see range trading for next week right here. Based on last week's price action, we can see significant resistance just under 119. So if we can get above 119, hold above that for a couple of days, that may give us then and only then the green light to start buying this. So with that, with the US Swiss franc, basically very highly correlated to Euro US, again an inverse correlation. The US Swiss franc is very much follows the dollar index to the numbers. So with the dollar index starting to rise, US Swiss franc has been rising, but we're not making any new highs here, guys. We're actually made another lower high and we're starting to turn down yet again. So this is an indicator potentially that tells me that the dollar index could be getting ready for a bigger move to the downside. Now, when I look at this, our neural index is down. We've got the crossover on the predicted MACD, but still above the zero line. But the predicted RSI, again, we don't have any. We're not in a trending move here yet, guys. So this could simply be a corrective move lower. The dollar could very well recover. So the level to watch next week, 97.25. If we're holding above 97.25, that gives us the green light to keep buying this. But if we can't hold this level, then shorts are absolutely on the table. The indicators from VantagePoint very mixed on this pair. Now, when we look at the pound dollar has recovered, as I suggested in last week's Forex Weekly Outlook, that the move lower basically was caused by Brexit talks, and the move higher is being caused by Brexit talks. And in my respectful opinion, Brexit is a very good thing for the UK. I'm surprised it's taken them this long to do it, actually. We've got our neural index higher, predicted short, medium, and long-term differences all advancing. This does look like we're going to hold the zero line on the predicted MACD, and the predicted RSI at 55.5. while we're not in a breakout scenario here, I would say the bulls are in control, at least for now. So with that close above 132.46, that key vantage point level, that is the area you want to watch very closely to start the week. If we can hold above 132.46, we should be able to make a run back towards the 132, 133, 134, 135 area in the days ahead, but that would be on dollar weakness. But again, the critical level to watch here is the same thing. When we broke out right around this area here, we're recovering now, but we've got to hold this level, this vantage point level at 132.46. If we can hold above that, we are going to move higher. The indicators are relatively supportive of that, but again, Brexit is an absolute wild card. When we look at the dollar yen next week, I'm actually very, very surprised that dollar yen did not move higher this past week. And the reason I say that is because we had a very strong non-farm payroll number, and we've got a hotter CPI number. Again, in my respectful opinion, with the year over year 2.2% versus the Fed's 2% price target. So when we look at this basic equation, that interest rate differential between the US and Japan definitely favors the US. So we should be moving higher. This here, I would be very careful if you're an equity trader watching this video, because if the dollar yen continues to sell off, that tells me that probably the S&P 500, the NASDAQ, the Dow, all of these major, and the Nikkei, all these major indices are likely to follow the dollar yen lower. So I'm watching it very closely, but the Vantage Point indicators, you can see that we've been just riding this 18-day predicted moving average, and then we've pushed lower on Friday. But Friday is not, again, in my respectful opinion, it's not a true price. Very thin illiquid markets. New money is not coming into the market on a Friday, guys. It comes in on usually midday Monday to Tuesday, and then once back out again on Thursday. So keep that in mind. But if we can retake this 112.14 area, that will tell me that Friday's move was a false move, and we are going to turn around and start moving back up towards this 113, 114 area. So don't be careful about getting caught short here, is what I'm saying. But the Vantage Point indicators are pointing towards the dollar yen moving lower. Now, as we move into our three main commodity currencies here, if gold and oil continue to push higher, then that's going to push US CAD lower. But right now, we are holding a very big level all week, 124.56 on the US CAD pair. Canadian economy is certainly not doing very well at all, to be perfectly honest. Oil prices not doing great. They're still basically range bound, so not a lot of support right now for these commodity currencies. And if we do get it, it'll be based around dollar weakness, not really necessarily demand for the Aussie, the New Zealand, or the CAD. So when we look at this, our neural index is switched and is moving back higher. We're above the zero line on the predicted MACD, and we're dead flat on the predicted RSI. So we're looking for a break up here or a breakdown here on the RSI to really get this trade moving. But for now, the key thing you guys need to know for next week, 124.50. If we can hold above this level and keep closing above that level, we are going higher. Now, with Aussie US, New Zealand US, a very similar trade. You can see that we've come up and tested the Vantage Point 18-day predicted moving average on Thursday and Friday, and we're closing above it. Now, my only concern is, again, the market doesn't fully understand what that CPI, the overall CPI data on Friday is comprised of. So when we look at the year over year again, this could very well be a false move. We'll see if we can build on this for next week, but 78.38, that's the level to watch, guys. If we can hold above this level, then we can continue potentially to advance back towards the 80.50 level. But my optimism on that right now remains heavily guarded based around the aforementioned data coming out of the US, the non-farm payroll, the CPI. But again, the indicators from Vantage Point are certainly warming up to the idea that we could be getting ready to go long. 58.9 predicted RSI, predicted differences all recovering, the neural index up, and the close above this area. So next week, that is the critical area to watch, and if we can stay above it, then longs will continue to work. Same thing applies to New Zealand here. We've had a big move down here, very steep trend line you can see that I've drawn in here. We've broken through that trend line, and now we're challenging that, pushing above the key vantage point level, 71.56, with the close of 71.68. So we could see further bullish activity, but you can see that this chart is almost identical to the Aussie US. We had the retracement up to the 18-day moving average, and we only pushed above it based around the data that came out on Friday. But we could see further longs, but to confirm that, I want to see a break of the 60 level on the RSI, and I want this predicted MACD back up above this zero line in the coming days and weeks ahead. If we don't get above that, then this move is simply corrective in nature, and ultimately this pair will follow the Aussie US lower.